Welcome back to The Explainer. We're doing something a bit different today, and honestly, it's totally fascinating. We're going to perform a micro-autopsy, basically a forensic deconstruction of one single, highly evocative image that tells a story of financial loss, market trends, and physical reality all at the exact same time. We talk about markets in abstract terms a lot, but today we're bringing it down to the most granular, personal level possible. Okay, let's jump right in.
Right off the bat, before we even touch the numbers, just look at the canvas itself. This smartphone screen has, well, seen much better days. It's heavily cracked, spiderwebbed right across the glass, and brilliantly, stubbornly held together by literally just one yellow rubber band near the top. You know, this isn't some pristine Wall Street terminal. Highlighting this physical damage really grounds the financial data we're going to look at in a gritty, everyday human context. It's a stark reminder that behind every single blip on a chart, there's a real person making real decisions.
Section 1. Introducing the asset. So right near the top, tucked just beneath that rubber band, sits our asset, Ratan India Power. The ticker symbol is RTN Power, and it trades on the NSE, which is India's national stock exchange. Now, Ratan India is heavily involved in power generation, and as you probably know, that's a sector super sensitive to macroeconomic shifts, regulatory changes, and capital costs. Keeping what the company actually does in mind adds a whole layer of weight to the numbers we're about to dig into. Interestingly enough, the current trading price sits right at 9 rupees and 16 paise. And just below that, you can spot a tiny, almost negligible daily dip of 0.02 rupees. That's just a 0.22% drop. On a day-to-day basis, that fraction of a percent barely even registers, right? It just feels like your standard run-of-the-mill market noise. But as we're going to see in a second, that tiny daily dip is just a microscopic piece of a way bigger, much more painful story. Section 2, reading the downward trend. At the bottom of the chart area, you'll see the 1M button is selected. This just means we're looking at a 1-month time frame on a candlestick chart. Now, as a quick refresher, each of those little vertical blocks, the candles, represents the price movement over a specific interval. Green means the price pushed up, red means it dropped down. And these candlesticks are so powerful because they don't just show where a price ended, they actually map out the emotional battle between buyers and sellers during that entire block of time. And wow, this brilliantly illustrates the macro trend for Ratan India Power over the last 30 days. I mean, just look at the overwhelming visual presence of those downward trend lines. It's practically a sea of red. You can visually translate exactly how steep and consistent this stock's drop has been. It is essentially a cascading waterfall of selling pressure over a single month. There are barely any green candles interrupting the fall, which signals a relentless bearish sentiment. The sellers completely overpowered the buyers week after week. Section 3. The portfolio breakdown. Now take a close look at the average purchase price in the small text, 15 rupees and 52 paise. Think back to our current price of 9.16. There is an instant, incredibly stark contrast between this entry point and where the stock is trading right now. The investor bought in significantly higher than the current reality. Basically, they entered the market right before or maybe even right during that massive sell-off we just saw on the chart. Let's actually walk through the literal math of this user's portfolio to see exactly what that gap means in real money. We've translated the small gray and red text to make it crystal clear. So, the investor owns 111 shares. At their average purchase price of $15.52, their total invested capital is 1,722 rupees and 72 paise. But because the price absolutely plummeted, they're currently sitting on a total loss of 705 rupees and 96 paise. Every single red candle on that previous chart directly eroded the value of this specific holding. Section 4, the anatomy of a loss. So the really crucial point here is the massive gap between expectation and reality. The expected value when buying in at 15.52 was likely growth or, at least maintaining value as a solid long-term hold. But the current reality, vividly displayed by that steep drop, is a trading price of just 9.16. It's the classic investment trap, isn't it? Buying high and watching the fundamentals or market sentiment just rapidly shift against your position. And man, here is the brutal final percentage of that portfolio's loss. Negative 40.98%. It's written right there in red ink. Nearly 41% of the initial investment's value has simply evaporated into the market.
And remember, recovering from a 40% loss requires way more than a 40% gain. It actually requires a near 70% return just to break even. That is a heavy, heavy mathematical burden for any retail investor to carry. When we zoom back out to the big picture, all these elements build into one singular message. It's a really striking juxtaposition. On the screen, you have the clinical, undeniable math, a 40.98% financial loss. But wrapping around that screen, you have the physical damage of the device capturing it, the shattered glass, that desperate yellow rubber band holding the whole shebang together. Both the phone and the portfolio have taken a massive beating. It's kind of this fascinating artifact of modern life, where our digital wealth and our physical tools are degrading in tandem. Which leads us to a really fascinating final thought. Does holding on to a depreciating asset mirror the way we hold on to a broken rubber-banded screen? It's a profound question about the psychology of taking a loss, the fundamentals of risk management, and just our sheer human reluctance to let things go. Sometimes we hold on hoping for a magical repair, a stock bouncing back, or a phone continuing to work despite all those cracks. So what story does this single device tell you about how we handle damage, both physical and financial? Thanks for joining me for this explainer, and I hope this micro-autopsy helped you see the deeper stories hiding in the everyday data all around us.